Recently, we've seen some significant changes in the insurance market, and these will affect both households and businesses. Can you tell us a little bit about that, please?
The market is what we describe as a softening market. That is, the rate of increase that you're seeing is less than previous. So the market is just easing. If you consider the sudden increases that we had in the wake of Cyclone Gabrielle and the Auckland floods, we noticed significant uplift in premiums. Now we're seeing the premiums starting to come down, but they're not back at prior levels. However, you may see some accounts renewing at the same rate as last year, although it's going to be very much on a case-by-case basis. We can only talk in generalities because every individual will have a different outturn in terms of claims or physical attributes.
So for people who don't know, can you just tell us a little bit about the difference between a soft and hard market?
Sure. In a hard market, we're seeing that insurers reduce the amount of exposure they're willing to write. That is, the number of risks or the type of risk that they're willing to write. That drives up pricing. And pricing are really representative of claims. In a soft market, we see there's more competition in the market as capital or cash to underwrite risk flows into the market. More capital, more investors, more competition, because other insurers want to compete for that market share, and that drives the pricing down.
So Paul, why the sudden change in market conditions?
There's additional capacity that's come into the market, and that is people willing to invest in insurance. It's been changes in the London market that has actually attracted more capital to the New Zealand market to underwrite risk. And because there's been an absence of disasters in New Zealand and the market is profitable at the moment, that's actually encouraging people to invest in the market and driving pricing down.
For businesses and households, how do these changes impact their insurance?
The changes are positive for homeowners and business owners. Insurers are starting to broaden their risk appetite, so they're willing to write risks that they may not have written the last 12 or 18 months or perhaps longer. And they're also being more competitive in terms of the pricing, which is great news for the policyholder.
Given the softening market, what advice would you have for people?
Talk to your broker. It's very easy to chase premiums and think that getting a cheap premium is the right answer. The biggest issue is actually getting the right cover, and your broker is very well positioned to be able to give you that advice and support that can be cover tailored to your needs.
So for people planning ahead, what are you seeing in the near future?
The market is cyclical, and at the moment we're enjoying a softening market with prices coming down. And that will continue until there's some driver to force a correction in the market, like a natural disaster. Work with your broker to make sure that you've got the right cover in place that's aligned to your budget. But remember, price is what you pay and value is what you get.